Hi, everybody. This is Lance from TraderTraders.com here. This video, we're going to go over safeguard trade with the higher width put debit spread. We're going to be looking at a low VIX environment, which I think it would be preferred to do this on. I got my old school shirt on. Now it's flipped with the weird camera, but still old school. So let me share my screen real quick and things that I'm looking at. So took this trade on today. Markets open on Memorial Day, and if you want to appreciate everyone in memory for anyone in the armed services. So for this safeguard trade, I did 172 days out, really far out in time. So I want to take advantage of the low VIX environment. So go really far out of the money on the naked puts. I bought a 5,000 put, sold a 4,700 put. That is a 300 width spread. MES is a 5 multiplier. So if we do 300 times the 5 multiplier, this could make up to $1,500 in profit just on the put debit spread if we get below the 4,700. I also sold two at the 4,250. These are two naked puts. Total initial credit on the trade was 11 times that 5 multiplier, looking at about $55 in initial credit. Now, if you look at the analysis tool here, right around that 5,000 strike, anything above it, we're going to be at that max profit if everything expires worthless. If we go between 5,000 to 4,700, this is the put debit spread, to make some additional profit. The max profit would be right below 4,700, and that's where you get that $1,500 gain, plus the initial credit that we got of the 11 from the naked puts. And then right here is where we sold our naked puts at the 4,250. Notice how below it we have much lower break even, and that's due to the larger put debit spread. So with the low VIX environment, right now the VIX is at 12.3, really, really low. It's going to be a little scary to go on really small put debit spreads just because you're going to have less protection there if the market drops a bit and if implied volatility goes up. Some weird stuff there. Here we go. So again, having this much larger tent with that 300 width does give us a little bit more protection, especially with the lower implied volatility environment. What's interesting is if the implied volatility goes up at any time during this 172 days or so, then there's a very good chance that that'll happen at some point, just because we're at pretty much historically low volatilities. We'll be able to roll up the sold put of the put debit spread. So you can roll up the 4,700 put and take in additional premiums in the credit. The way I'll show you how to do that is we just compare it right now. If I roll the 4,700 and roll the strike up to make it less than a 300 width, and then I could go around 4,750. I would take in a 3.5 credit. It's actually 15 or so dollars. You could also go up and strike to say 4,850, roll it up 150 points. That'll give us a 12 credit. And notice the 12 credit is actually greater than the initial credit in the trade of 11. That's assuming right now the market didn't even move and I just put on 150 width. If VIX increases and the market drops, we'll be closer to this 5,700 strike price. And because of that, the put debit spread will start to gain value. And then those rolls could be worth even more than that. If the market stays where it is and goes up, and if the VIX stays where it is or goes down, that roll will be close to or less than what the current numbers are. So just be aware of that when you take on this trade. I'm not doing a ton of credit right now. I'm only taking in $55. However, it doesn't use up much buying power. And I'll show you the reasons why. If you look at the sample trade, I'm going to get rid of that. No, that's in the way. Here we go. So same trade I took in, buy the 5,000, sell the 4,700, and sell two of the 4,250s. Double click, change quantity to 2. So at 11.5 premium. The buying power use is very low. It's only $253. So, but depending on span margin requirements and what positions you currently have. This number could be a little bit different. However, it's not going to be much more than, say, $350 in buying power. You do want to leave extra cash on the side to deal with any span margin requirements if the VIX increases. However, I think it's reasonable to have about $800 to $1,000 to take on this trade. If you're doing this with ES, just multiply everything by 10, and then you could still do that with a larger account. But it is very small account friendly because we're able to take these trades on. Now notice the buying power will change if I move the PDS. Let's say I do a 50 with PDS. Suddenly the buying power went up at $150. So by doing a larger width on the PDS, you'll notice that the buying power is decreasing as I lower the width every time. And the reason for that is you have a bigger possible profit here. So because of span margin requirements, the brokerage is aware of that. And then you don't need as much buying power. Because again, if the market drops, you're able to get that bigger trap profit. And there again, this trap profit is 300 width times 5, $1,500 profit. I'll definitely appreciate a $1,500 profit off about $250 in buying power, just because that's a great return to have. These would be recommended to do if you see a VIX increase, because if the VIX increases, then there's a good tendency that it might continue to increase. The market might continue to drop in most cases, and then those put debit spreads will be worth more. Notice on the naked puts, I'm still going relatively low delta, 0.05. I might go around 0.04 to 0.07 delta in these most cases, just because it's really far out of the money right now. MESZ is at, let's see, MESZ is at 5449, so now 5450 minus the 4250 is our naked puts. We're about 1,200 points away from the current price. Divide that by the 5449, you're about 22% out of the money in this trade. The market has to drop 22% in order for us to just touch the 4250s. And then we can make even more money again because of that 300 with debit spread. Our break even is lower than the 4250. So all these are good conditions for getting in a small initial credit. Again, $50 off, maybe about 600-700, looking at about 8% return, just the way that the trade is. However, remember when you roll those naked puts up, you roll to like 150 with. When it gets closer to expiration, then roll the 50 with if you want to. You could take in additional credits. So don't think that your total credit would be $55 in the end. There's a good chance that you can make more as you roll these the put debit spreads closer to like a 50 with or so. Another thing to consider is it's good to have that really large width on the put debit spread, just because if the market does drop, this gives us a bigger cushion than if we sold, say, a 50 with. And selling a 50 with won't give much protection at all, but a 300 with will give a good amount of downside protection, at least early on in the trade. However, that's not to say that the trade won't work. If the market drops right away, you could see, if you can see the market with an initial drop, the naked puts could be quite a bit more. Easy way to see that is to look at 4250. At 172 days out, we're at 20 premium. But if I go closer in, say 116 days, the 4250 is a lot less premium. However, it could easily shoot up if the market drops. So hopefully all that was good things to consider. In general, the main point is if you have a very low VIX, it could be more advantageous to do safeguards with a higher put debit spread, like a bigger width than a standard, say, 50 width. When the VIX is increased, though, you might want to consider going with a lower width, like a 50 width put debit spread, and then going even lower on the naked puts, just to keep ourselves with good downside protection. Remember, in the ends, our goal is to make sure that we're managing our risk properly. And in order to do that, you want to make sure you're doing relatively safe trades. So again, this is Lance at ThetaTraders.com. If you found this video helpful, click like, subscribe, You also join at datatraders.com. We have over 300 like-minded option sellers and future sellers that do this consistently to make passive income. Again, hope you have a good rest of the Memorial Day weekend, and see you guys on the next one.